Hey everybody, this is Ryan Mallory with SharePlanner.com, and today I'm going to talk about the Stochastics Oscillator. And some people may say it's an indicator. I almost just called it an indicator, but nonetheless, it's one of the few things that I put on my charts outside of price and volume. The others would include like moving averages, and then just me basically drawing support and resistance levels and trend lines. Also use volume. That's pretty important, in terms of having a moving average to see if it's above average volume or below average volume. But today, like I said, it's about the stochastics. And it doesn't play a huge role, okay? I don't think that major trading decisions or trades by themselves should be based solely on the stochastics indicator, or again, the oscillator. But I do think that it plays a pivotal role for helping you figure out how aggressive you want to be in the stock market. Do you want to continue to buy more positions when it comes to individual trades? Is this a stock that's run up too much too fast, and is it more likely to pull back in the short term rather than continuing to go higher? So essentially, this is a oscillator that was created by a guy. He's got a doctorate degree, more than what I got. Now, George Lane created this oscillator to show the current price relative to its recent price range, okay? So it kind of helps to show support and resistance. I don't really even think it's really that good for showing support and resistance. I really think it helps to show the direction of momentum, whether there's any divergences, and whether a stock has been too oversold or too overbought in the short term to really merit getting long or getting short on a stock right now. So it can help you make some trading decisions, but it shouldn't be made in isolation of everything else that you can consider, like price, volume, moving averages, and whatever else that goes into your trading decisions. So I could go over this indicator with you guys and show it to you, and I'd probably fumble it a little bit trying to make it, simplified and understandable, but I'm not going to, okay? It's a little bit complex. I don't have a math degree. I just tell you how I use it in my own trading. So typically, you have a overbought level, which would be considered 80 or higher on the stochastics, and the stochastics measures from 0 to 100, okay? Anything over 80, that's considered overbought. Anything below 20 is considered oversold. Do I go right by those? No. I kind of get more interested when it gets like above 90, maybe even like between 95 and 100. And on the oversold side, I don't really care if it drops below 20. I'm more interested in, when it drops below 10 or even 5 for that matter. Specifically, when we get into a really heavy sell-off like what we saw in Q4 of 2018, when the market was just selling off big time. And you can see on this chart here, when we go back, we were hitting some crazy oversold readings. In fact, the lowest that it ever got was 5.6, okay, during that whole sell-off. And then, well, guess what? That was the bottom. So we got really low and we got really extreme. And that's really what I'm looking for when these sell-offs happen, is do we hit some abnormal extremes to help warrant a decision on whether or not I want to continue to be long in the market, continue to be short. And again, you make that in conjunction with price and volume as well. You don't make that in isolation. So when you set up your stochastics indicator, check this out. On something like TC2000, and most of them all operate in the same manner, you have a little box here. You can say what period. So this is basically the trading range that you want it to measure. And this is going to be, for me, 12 days, okay? The percentage K, I just typically use that as a default. Now, sometimes people will take this and make it like 20 instead of 12, or 5 instead of 3. And it all just depends on preferences. You have to play it around with it and see what you want. Read up a little bit more on stochastics, because I'm just giving you kind of like a basic understanding of it right now and how I use it. And then you have the percentage D, which is simply a moving average to help kind of smooth over the oscillator itself, to help you see crossovers. And all that is simply me taking the 5-day moving average of the stochastics. That's it. That's all it is. What do I look for with the stochastics? I already talked about oversold, overbought, but what about divergences? Because sometimes divergences can provide some really good clues of whether or not the stock may be continuing to go higher, but is it really being supported for further growth, or should you start booking profits? So I'm going to show you 3 examples of that today. Now let's go back to January in the Facebook stock. You can see it starts to rally, and it's rallying impressively. It gets up to 97.5 on the stochastics indicator, but it doesn't just stop there. It consolidates a little bit. You see a little bit of a pullback and the stochastics indicator, and then it starts pushing higher. In fact, it goes way up there, right? But guess what? We're hitting some major new highs, but the stochastics indicator, it's not meeting the same highs that it had previously made in January. So it's actually showing a little bit of a divergence. It's a slight divergence, but guess what? It was enough to give you a clue on this thing is going to pull back some possibly. And it did. It hits this, and this high of 171, and then it just starts pulling back all the way down to a little bit into 150s. So that was a pretty significant pullback. Yes, it continued to march higher and everything, but in the short term, you could have booked some profits while the stochastics indicator was showing a significant bearish divergence. Now let's go to Apple. And now Apple had a huge sell-off back in Q4 of 2018. And you can see here, I mean, a lot of people lost a lot of money on this chart. However, there was some signs along the way that was saying, okay, the selling is getting exasperated and it may be time to get long on this stock. And you can see here in mid-November, yes, the selling definitely wasn't done in mid-November, but it did put in a new low point, and then it tried to pop a little bit, mainly off the news of this one-day event here. And then it came back down and made a higher low. And that's always significant because as the stocks continue to move downward, this thing is actually putting in higher lows. So there's a divergence there, and it's a bullish divergence. But is it enough to act on? Yeah, I don't know. I mean, it's not the steepest divergence, but it's one worth noting. But it gets even more interesting, okay, when it can barely get oversold. So on January 3rd, this thing is hitting new lows, but it's not even all that oversold. It's not even really in oversold. It's a couple of days later that it actually gets oversold. And then it starts to bounce, okay? This was the time to get into it because you have a significant bullish divergence happening here, and it's a sign that the buyers are getting interested in the stock again. So this is a way that you can use a divergence in a stock for making a decision whether or not to buy or sell. On to Netflix. Now, a trade, again, I got tons of markings on this, so just ignore it. I've traded this thing a ton over the years. But huge gap higher. It's unfilled. And you got some consolidation at the top followed by this huge red candle. Now let's look at the stochastics. What is it telling us? Well, we got a crossover to the downside, and it's pulling off of its overbought conditions. And that's a sign there that maybe this stock wants to make a run for this gap fill. And look how perfectly it lines up with the gap fill. It completely fills this gap from July, and you can see right here on the chart, it goes way into oversold territory and stays there for a while before finally picking up steam and moving back higher. So again, you see it starting to roll over where the percentage K crosses below the percentage D, and then all of a sudden you have a possible pullback right there on your hands. So you want to let it kind of simmer a little bit to where you can make sure that, okay, this is clearly a rollover. Like once you get to about July 31st of 2017, you can see, okay, it's clearly below the percentage D. That's me speaking about the percentage K, and it wants to go lower. So that's a perfect example there of where like a topping pattern in stochastics can also give you some clues about potential topping patterns in the price action of a stock. And another thing that a lot of people don't really get about stochastics and how it relates to price action on the stock market is that just because it's overbought, just because it's oversold, doesn't mean it's getting ready to reverse. I see so many times on message boards, on social media websites like StockTwits, which I highly recommend you join. It's a great site. Or Twitter, is that people say, oh, this thing's gone up too much too fast. Yeah, that may keep you from wanting to buy more of the stock. That doesn't necessarily mean that you need to start shorting it, okay? Big difference there. You can decide, I'm not going to get into it because it's made a 50% rally over the last month, and it's clearly overbought, but I'm not going to go buy more of it because I don't feel like the risk reward's there. However, that doesn't mean you say, I'm going to go short because it's gone up 50% in the last month and it can't be going any higher than that, so I'm going to short it. No, because it can go higher, okay? But the reason why you don't make buying decisions like that is because the risk reward has to be in your favor, just like it does when you're shorting. And so while, yes, it can keep on going higher, even in the midst of extreme overbought conditions, it doesn't mean that it's a good risk reward setup, and it certainly doesn't mean that you want to get short on the stock. For an example of how long a stock or a stock market can stay overbought, look at the S&P 500 here. So you never know how long it's going to stay overbought. Sometimes it's fast. Look at this little, pop right there into oversold or overbought conditions. It didn't stay there for very long. Look at the oversold conditions here from August of 2017. It didn't stay there very long before going up there. But if you go into 2018, you can see it stayed much longer in oversold conditions during the month of December, very long time. And then look at how long it can stay overbought for. Essentially, except for a few moments, and brief moments at that, going from early January all the way through late February, the stock market was completely overbought, never pulled back. I mean, look at this. It was a straight up trajectory. And then you had a little bit of a pullback here of about 5 days that created a little bit of oversold condition. But look, again, Not very much. And then some people might say, hey, look, you have a bullish divergence here because we're making a higher low, but that's not really so because we're making a higher low on the index too. So you have to be careful with the stochastics. I'd say before you really implement it solidly into your trading strategy, make sure you want to know why it's going to improve your trading strategy, how it's going to help you, and how it's going to improve your bottom line. Because if you just start blindly using these things and say, okay, the market's overbought, oh, okay, the market's oversold, and then you start making your trading decisions based off of that without considering price and volume and whatever else might be part of your existing trading strategy, it can really throw it into flux. So don't do that. And if you have any questions, feel free, hit me at ryan@shareplanner.com. Love to answer your questions and help out in any way I can. Thank you. God bless. Thanks for watching. I hope you enjoyed the video. Please be sure to like and subscribe to my channel, as well as check out some of these other cool videos that I've done. And if you want to swing trade with me each and every day, you can do so by going to www.shareplanner.com/splash zone. Thanks and happy trading.